Hey everyone, so in this video I'm going to give you 5 stocks that you can buy and hold forever for long-term investors. I've analyzed all these stocks myself and most of them I hold in my portfolio. However, before buying it, it's important that you analyze all these stocks yourself because I'm not a financial advisor or a professional investor. So one way to determine if a company is a good long-term buy and will still exist in 10, 20 or 30 years is if the company has a strong moat. In Germany, it's called Burggraben, which means essentially that the company cannot easily be replaced and that it's hard for competitors to build a similar company. So with that said, let's jump into the video. My first long-term conviction buy, everyone knows it, is Apple. Yeah, the biggest company in the world again? Yes. Do you own an Apple product? If yes, have you ever thought about replacing it by switching to a different operating system or getting a different hardware from another company? Probably not. The great Apple ecosystem, how it's always called, is so perfectly designed. So if you buy any Apple product, be it an Apple Watch, a MacBook or an iPhone, the product perfectly aligns with other Apple products. You basically want to get another Apple product that perfectly communicates with the product you already own. For example, you own an iPhone and you think about getting a new computer, a new laptop. Do you get a normal Windows laptop or do you think, okay, maybe I spend a little bit more, but then I'm like very satisfied because all my devices communicate like very good with each other and it all just, it gets very easy for the customer to buy another Apple product. So Apple has one of the most loyal customer bases in the world. You see it every year when the new iPhone comes out, people camp in front of the Apple stores to get the iPhone. Still nowadays, when there's only incremental changes to the iPhone, and they not only build very good hardware, but their software is also what customers love, that it's easy, that it's safe. On the other hand, Apple also sells services that make up a bigger and bigger portion of Apple's revenue, and that service revenue has a very high profit margin, like selling Apple Cloud or payments, Apple credit card, and so on. And when customers stay in this Apple loop and get a new iPhone every few years, get a new MacBook, and so on, Apple is in a great position here to have like an infinite income if they keep innovating and getting out new and awesome products for their customers. And they are still growing like crazy, as you see in the numbers here. From pandemic times to now, they grew iPhone sales like crazy. Yeah, customers just love the company. Okay, stock number 2, old and boring Microsoft stock, but it's a huge cash cow. Here's the fact: 95% of Fortune 500 companies use Microsoft Cloud Service Azure, and 90% use entirely Microsoft 365 suite. I mean, nearly every big company and most universities use Microsoft on a daily basis, and basically their entire business runs over Microsoft. Of course, there are maybe better solutions out there. However, for a big company, it would be a huge pain to switch from one operating system, all the employees, everyone, to another operating system. So here Microsoft just aggressively scaled, and they will very unlikely be replaced by a different operator in these services. And just recently they increased their prices for business clients by up to 20%. And this is just then pure extra revenue because of the reason I mentioned before. All in all, Microsoft is a huge cash cow and is still growing rapidly and is paying a very nice dividend already for those who are seeking to live off their investment. Number 3, Alphabet, or better known as Google. We all know Google as the most widely used search engine. In fact, since they started, they kept a nicely 85% market share of search engines, which is just pure world domination. If we even calculated out China, I think this market share would pop up to about 90% or so. The moat here is it's the best and most accurate search engine. People use it every day. It's on all devices of people. Also because Alphabet not only owns Google, but more than 200 companies. Also Android, for example, where of course the Google search engine is the primary search engine already installed when people buy a phone. Alphabet also includes like startups like Waymo and also companies like YouTube that are big cash cows for Alphabet that is growing very rapidly in the advertising market. So here I see the growth continuing for a very long time. and I do not see them going bankrupt anytime soon. For all these tech companies I talked about right now, one thing they have in common is that they have enormous amounts of cash sitting around, all of them. Which means if they see like a decline in one of their products, they can just replicate other companies or buy other companies or hire like 10,000 employees like Facebook did to create a new product. So for them, they are just in a super great position and are basically monopolies, as you can say, which on the one hand may be concerning. On the other hand, as an investor, it's a blessing. All right, company number 4 is not a tech company, but a real estate company. And we're talking about McDonald's. Real estate, you might think, watch the film The Founder if you haven't, and you will exactly know what I am talking about. McDonald's is the biggest real estate company basically in the world. They own over, I think, 20,000 locations. I don't have the right number at the moment, in all prime locations around the world, in every prime city in nearly every country. It works like this, that McDonald's owns most of the land. They only operate a few own stores, and they lease this land, the property, to the franchisee, who pays McDonald's rent and has to give McDonald's a revenue share of every sale they make, and also has to pay huge amounts of franchisee fees. So McDonald's has very low cost here and basically makes pure profit of these fees. The moat here is definitely their prime real estate and also their widely known brand. For example, if you go to a country where you have no idea what the food is there like, you may end up going to a McDonald's because you just know the Big Mac tastes there exactly the same as in your home country, and you're just safe for what you get. But what about the accelerated trend to healthy eating, you might ask? Well, McDonald's can of course change all their menu if they want. Like, they also implemented like more salads, and I think this McPlant burger, which people very much like at the moment. However, I think they will always keep some unhealthy stuff there because people just crave this fatty and salty food sometimes. And even myself, I see myself sometimes like once a month or once every 3 months going to McDonald's because I just crave this food sometimes. The company will not like 10x in the next year, but it will be here for decades, and it has also been a very reliable dividend payer. And I'm very sure that this company will exist in 30 years from now as it existed 30 years ago. And if you buy in at the right price, it will be a quite good investment. All right, last but not least, a company that you might heard of or not. It's called Blackrock. If you own any ETF, exchange traded fund, like an MSCI World, S&P, whatever, I'm pretty sure that you are a customer of Blackrock already. Blackrock is the largest asset management firm in the world. They have over 9 trillion assets under management. And the most known product are the iShares ETFs. So if you own like an iShares Europe ETF or iShares MSCI World, whatever, you are a customer of Blackrock. And yeah, the way they make money is through fees of these ETFs or also actively managed funds. Like, you always have this like 0.1% fee, for example. And the more people invest, the more fees they can collect. And with over $9 trillion in assets, there are a lot of fees they can collect. I think they have a great moat here, first of all, because of the huge amount of assets they can control and also the power they get through this. And also they have like a large amount of institutional and private investors that trust BlackRock. And as long as people want to have like an easy way to invest into different companies, sectors, countries, whatever, ETFs will still be around, and the trend is really accelerating right now. So yeah, they will be here for a number of years. If you want to invest in ETFs from iShares, for example, or into individual stocks or into cryptocurrencies, you should open a brokerage account with Trade Republic. If you live in Germany or Austria and want an easy way to start investing, this is the best broker for beginners. Why? Some brokers have like horrendous fees, like 10 euro for placing an order. With Trade Republic, every order is just 1 euro. So you can already start investing with like 200 euros and still pay like a very low percentage in fees of your overall investment amount. With my personal link, you get 15 euros for free if you open an account with them after you do your first trade. directly deposited into your bank account. All right, I hope you found this video insightful. If yes, please leave a like and subscribe to my channel to see more about investing, entrepreneurship, college, etc. And I hope to see you in the next video. Bye bye.